Today is Monday, July 20th, and this is a post-market review for the stock market activities today. You are looking at a heat map of today's activities, and as you can see, what a difference a day, or shall we say a week, makes. Turns out that the grass is still greener on the other side. And now we see the switch back to technology names. Look at some of the moves that we've seen today. Amazon up almost 8%. Microsoft up over 4%. Adobe over 5%. ServiceNow over 6%. And Tesla, of course, almost 10% move. What got whacked today? The travel names, the usual suspects. Here we go. These are the travel names, the cruises, the hotels. The airlines got whacked, and of course the utility names that caught a bid last week. So we're again at this yo-yo game where after a vaccine headline, we buy the travel stocks and we pump them, and then we dump them and we switch back to the technology name, we pump them until another vaccine headline, then we dump them, back and forth, typical topping behavior. But the move in the market today is attributed to the Astrazeneca vaccine study results. I made a tweet yesterday and I told you that this study is not significant, even though a lot of stock and a lot of moves and a lot of anticipation for it was already prepared. 90% of the options that traders bought on Friday on AstraZeneca were calls. The stock was already pumped so high to the point where we get to the phenomenon of buy the rumor, sell the news. And I put that tweet last night. And now you see that at the moment that AstraZeneca came out with their results, the market flipped. AstraZeneca started to sell off along with a lot of vaccine names. The travel names that caught a bid in the morning immediately reversed. And what caught a bid? The algos immediately reversed back to buying technology, aka stay-at-home stocks, aka momentum stocks, aggressively. And this is the result. You're seeing it right in front of you. I told you in my Moderna video, these antibodies, vaccines, studies are all bullshit. In a normal vaccine, you inject the antigen, aka dead bodies of the virus, inside somebody's body and trigger the antibodies reaction. Therefore, you create immunity. In these antibodies vaccine, when they inject the antibodies or elicit a response where your body produces antibodies, it is the snapshot effect. Yes, antibodies are produced, but then they disappear because once they're created, they look around like, okay, we don't have a job here. There's no virus inside this body. All right, we'll go back to sleep. Goodbye. And they disappear. Of course, scientists don't have enough information and enough findings of COVID so they can create antigens of COVID and inject in somebody's body. That never happened in any coronavirus that we had before, not during SARS, MERS, or any other coronavirus. So I am very skeptical of these vaccine headlines. They will pump, they will dump, and that's it. I'm going to show you the yo-yo game that happened in today's market right away. Here is a 15 minutes chart of AstraZeneca stock. Watch what happened. The stock popped all the way up. And around 6:30, when the results started coming out, the algos immediately made the decision and sold it all the way down. Here is a chart of Delta Airlines, a representative of the travel stocks, aka reopening stocks, aka value stocks. Look at what happened. Pop in the morning, and as soon as the AstraZeneca headlines hit 6:30 Pacific time, goodbye. Sold it off. And that was that. The opposite story happened in the stay-at-home, aka momentum, aka tech stocks. Look at what happened to Zoom, the poster boy for the stay-at-home stocks. 6:30, immediately as the AstraZeneca results were out, it caught a bid and it never looked back. That's the story of the stock market today. We are not going to do headlines today because we didn't have a lot of headlines, but I'm going to comment on this story from Mark Cuban. So Mark Cuban comes out and says, hey, this looks a lot like the dot-com bubble. Now, who knows more about the dot-com bubble than Mark Cuban? The man made his billions because he sold his Yahoo stock at the top and said goodbye and never looked back. Now, if you remember, or maybe you don't remember, you were too young back then, you can look it up. Yahoo was one of the hottest stocks back then. Everybody was saying that Yahoo's going to be the next Google. Yahoo's going to control the world. Yahoo's going to do this. Yahoo's the next Tesla, bro. Tesla was not, of course, born by then. But it shows you the same sentiment that we have today. And what happened to Yahoo stock? When they say stonks just go up, stonks, bro. Remind them of Yahoo. What happened to Yahoo stock? It's gone. It didn't go up. And Mark Cuban, of course, was very smart to cash out and say goodbye. It's the only reason why he's a billionaire today. Cuban says that his niece is asking him what to buy. And that is, of course, the sentiment, the mania in the market right now. Personally, I'm getting questions from my little cousins asking me if they should buy Nikola. And I told them, don't buy Nikola. The dip in Nikola, and when it was trading at 60-something, don't buy Nikola. That's what I said. Are you guys crazy? And what happened to Nikola's stock? You saw what happened. The stock crashed further. A neighbor that I talk to, I say hi when I walk around the neighborhood, asked me, since I'm a financial advisor before, if she should call his broker and add Zoom stock. Now you want to add Zoom stock after the movement already happened? Are you crazy? You're almost pushing 60. You're about to retire. You want to gamble with the money. Anyways, my father-in-law asking me a few days ago if he should buy NEO because all the Robinhood guys are pushing NEO higher. No. That's what I said. Don't buy NEO. It's too much. It went up too much. It's gone. This is 99% of the rally already happened. Oh, look what happened to NEO. NEO crashed. It's having a big rebound today, but it's going to crash further. The rally is over. It's done. Pump, dump, goodbye. But this is all pulse of the mania and the craziness and the euphoria in the market. Everybody, younger teenagers, the guy down the street, anybody, they're looking to buy stocks. What to buy? They're looking for guys on TikTok giving advice on how to buy stocks. You know how this is going to end. We all know how this is going to end. It's going to end in tears and a lot of agony. There's something called market Darwinism. Only the fittest will survive. Only the disciplined traders will survive. Here is a chart, a 15 minutes chart of the SPY index. We started a little lower, caught a bid, never looked back. And look at the level that we crossed. Remember this level? Let's switch at a daily chart. This is the most important level. And I told you, if we close weekly above this, you're gonna have to go bullish. You have no choice but to go bullish because they will push the market to all times high. So we're gonna watch the weekly close very, very carefully. Here is a daily chart of the Qs. Big day, reversal. Remember when people said this is a bear flag? Well, it turns out to the upside again. That's why we don't pay a lot of attention to technical analysis alone. Bear flags, bull flags, dojis, pig faces, all that crap doesn't matter. You have to combine all the information together. You have to understand the rotation that's happening in the market. Today was a big rotation day back into tech stocks. The question is, will it last? Here is the VIX, the same story. We're peaking below my line in the sand, the blue line. If we close weekly below this, I'm closing all my VIX positions. Goodbye. You have to stick to your rules. But understand this, the sell-off in the VIX doesn't necessarily mean a bullish reflection in the overall market. It could be a sign of complacency. It could be a sign of recklessness of investors not paying attention and being too comfortable in the position the market is in right now. And it's only after the fact, when the crash happens and the sell-off happens, when they scramble to buy the VIX and protect themselves. Well, this is the time to buy the VIX if you want to protect yourself. When it's cheap, you shouldn't buy it when it's expensive. You buy it when it's cheap to protect your portfolio. Here is a daily chart of Tesla. I made a Tesla trade. I posted on Twitter today. In addition to my traditional short, I shorted Tesla at 1750, and that position is still in the green. But a day like this, of course, makes you a little nervous. So make sure that you set your stops. If you're going to short Tesla, set your stops so you don't lose a lot of money if the stock pops. But here is another safe and really brilliant way to short Tesla and have a bearish trade on Tesla. I posted this trade on Twitter. It's a double bearish 4 options order, basically buying a calendar put for the 1250 and selling a reverse calendar call for the 2000. All in all, you see the prices right in front of you on the screen. You collect about $700. It says here 772, of course 7.72. You multiply that by 100 because each contract has 100 options. I did not get this price precisely, but I got around 7.37 for each option, so that's about $737. So you're getting paid about $700 to enter the trade. If Tesla, after earnings, crash, you make money from your puts. The 1250 put expiring next week. If Tesla pops over 2000, this is gonna be 20% plus move after earnings. If it pops over $2,000, you are semi-protected because your shorter leg will appreciate, and you also collected $700, so you only have to cover the time value in the longer call, and you have $700 to cover that. So this is a trade that's really brilliant. It captures the bearish side, but also protects you somehow if the stock pops for the bullish scenario. I also have another trade. I will create a video shortly for people who have Tesla shares. If you're a Tesla share owner and you're a little nervous that the stock might drop, I have a trade for you, and I will post that shortly in another video, and I will post it, of course, on Twitter. All right, let's do in the conclusion here, instead of looking forward to what to look at tomorrow and next week, we already did a earnings review, so you know what to look forward in the next days to come. Let's do something different. I got a few messages today saying that I'm stupid for being bearish. I'm stupid for shorting the market. Look at what's going on with the stock market right now. You don't have any idea what you're doing, etc., etc., etc. My counterpoint to you, okay, you want to be bullish? Fine. Which sector are you going to buy? Are you going to hop into the technology rally that we had today, or are you going to run and hop on the travel stocks, aka the value, the reopening ones, the vaccine ones? Which one are you going to pick? I'm really curious, because last week you hopped into the cruises after the vaccine headline only to get your ass kicked after they got sold off immediately. The cruise names, the casino names, the airline names lost everything they gained last week. Now it's the same mentality. You see the move in the tech and the rotation into the momentum names, aka the stay-at-home names, and you're seduced by it. You jump into it. You buy Microsoft. You buy Amazon. You buy Apple. You buy all these names, Zoom, and tomorrow you get your ass kicked again. Why? Whatever reason, it doesn't matter. United Airlines reports tomorrow. United Airlines surprises to the upside. The airlines rally. They sell the tech stocks and they move to the travel stocks. The next day we have another vaccine trial failure. They switch back to tech over and over and over again. Which side of the market are you going to buy? Roller coaster? I'm really curious to hear. What are you going to buy at this point? And then there's the other side of the market, the shorts. The guys who are bearish, but they're too scared to short. They're like, dude, it's too risky. I want to wait. I'm too afraid to short right now. I don't know. That's totally understandable. You don't have to short right now. You can wait till the move happens and hop into it. There's going to be a lot of meat left on the bone for you to chew on. But just to figure out the sentiment in the market, I looked at my favorite bear traders that I follow on Twitter or I keep an eye on. All of them today were waving the flag. All of them today were so devastated and pretty much giving up. That is your signal and sign that you should be bearish. The sentiment right now, listen to the commentary and read the sentiment right now in the market. On one side, the bulls, the pigs, the gamblers, whatever you want to call them, the mania in their comment. Just read some of their comments. Read some of their commentary. They're going insane. Every stock is going to go up. Microsoft is going to pop to 300. Apple's going to pop 500. Tesla's going to go to 15,000. Just keeps throwing numbers and prices around. The other side are the bears who just giving up too easily and saying, oh, you know what, the stock market is rigged. The Fed is going to keep pumping it up. Bill Gates is going to keep pumping it up. Whoever is going to pump it up, wave the flag. Okay, so what are you saying here? Should you hop into the bullish side? Is that what you're saying to your followers? Or are you just bitching and whining? Where is the confidence? Where is the strategy? Where is the discipline? And where is the philosophy of trading and investment that these guys have? Case in point, let's go back to the SPY chart. Looking back before the coronavirus crash, back into January, February of 2020, we started hearing about the coronavirus in China. And a lot of bears raised the alarm. A lot of people raised the alarm. Why is the stock market going up when we have such mysterious disease slowing down one of the biggest economies in the world? The market didn't care. It kept rallying and rallying and rallying. And then we have this little dip right here, little sell-off right here. And the bears felt empowered to quickly get a smack in the face. And what happened? The market started rallying day after day after day in insane amounts. The mania is right here. The longs tell the bears that they don't understand anything, and stocks just going to go up and up and up. Keep buying, keep buying. Who cares about the coronavirus? Who cares about this? Who cares about that? And the market keeps going up. The bears start to give up. Every dip get bought. Every time we think this is it, we get our asses kicked. All right, I'm switching to the long side. And you have a couple of days where you're vindicated, and you're happy that you switched to the long side, only to see what happened next. The crash smacks you right in the face, tells you to be a man, be confident of what your positioning is. Stop switching back and forth, until certain rules that you set for yourself are broken. What do we see here? The mania. And here the bears are empowered. They get a smack in the face right away. Another one. A smack in the face again. And now the bulls and the longs are empowered, and they're cheering, and they're forgetting about any protection in the market. Nobody cares about buying the VIX. Nobody cares about buying puts. It's all calls. It's all let's buy stocks. Who cares if they went 100%, 200%, 500%? It doesn't matter. They just go up and up forever. And you see the market keep going up until what happened here happens here again. And there is your lesson. This is not a prophecy. I'm not Nostradamus. I'm not telling you this is exactly what's going to happen in the market, but I'm telling you to keep an eye and understand the psychology and the psyche of the market and the players in it. Last thing I want to do, I want to answer some questions. I had some questions here asking me if I'm buying the VXX and the SQQQ, the short triple Q. The VXX I'm not buying anymore. I told you that on Friday because I already have a massive position in the VIX, and the way I'm doing it is not buy options. A lot of guys are mad. They say, hey, you told us to buy the VIX. We bought the option, expired, worthless. I never told you to buy options in the VIX. I told you to buy a proxy, VXX and others. In the meantime, you also sell covered calls, so you can raise money from your position. That's what I've been saying. That's what I've been doing. So that would minimize your losses in your position. And if you see a pop in the VIX, you're going to go to the green pretty quick. Here is the short triple Q I bought during the reversal on Monday. My price was $16.15. I bought around here. So my position appreciated. And today it went back to the red. What did I do? I bought more. I'm not buying everything right away. I buy a little, add a little more, until my thesis is destroyed, and then I nip it in the bud and say goodbye. But so long as my thesis is still there, you add gradually to your position. You never know what's going to happen tomorrow. Tomorrow, they might sell tech stocks, and the SQQQ appreciates again. Then Microsoft comes back with bad earnings. I mean, the stock moved already 4% today. How much more it's going to move after earnings? The likelihood is a big triple Q player like Microsoft will drop after earnings, and then you're going to see the short triple Qs appreciating. Stay confident in your positioning. Have some principles of trading. I'm not saying be stubborn in your position. If you're a bear, just stay bear forever. Set certain rules for yourself. If they're broken, you switch back. There's nothing wrong with switching to the right side of the market. But you have to have a thesis. All these guys who are chasing the market right now, chasing the tech stocks when they pop, chasing the travel stocks when they pop, chasing whatever other stocks when they pop, they will get slaughtered. They keep hopping from one place to the other, not knowing exactly what their thesis is. They have no thesis. They have no principle of buying whatever they're buying. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.